Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, January 14th, 2021. And in this video, we're going to do a follow-up to some of the recently highlighted trade ideas. In fact, the video I just finished earlier today, I talked about the reason for the lack of trade ideas. We haven't been completely without trade ideas, and that's why I wanted to do this video. The sectors and asset classes that I have highlighted have actually, done pretty well, and for the most part, vastly outperformed the market as strong as the stock market rally is. But again, it's been relatively light. But what I want to do, because I know a lot of people took these trades and may still be in these, I'm going to do an update to some of the recently posted trade ideas, and I'll zero in on the agricultural commodity sector. That's one of the sectors most recently I was bullish on. Starting with the trade idea video back from November 18th. I'll try to put a link to these previous videos. And then I did an update on December 31st, primarily on these agricultural ag commodity or agricultural input stocks. So these are companies, the whole basis, as I said during the 11/18 video, was that I had been bullish, throughout last year, very bullish on agricultural commodities, and notice a lot of these ag input companies were lagging, and of course they're, think of it, it's not exactly the same, but think of it like the gold mining stocks, GDX and gold mining companies, and then price of gold. Imagine seeing gold and silver rallying, 30, 40, 20, 30, 40%, and yet the gold mining stocks not. And ultimately the gold mining stocks will catch up. Now I will say there's more of a direct, one-to-one correlation, or much stronger correlation with gold mining stocks, because that is an immediate boon to their business when the price of gold and silver goes up. With ag commodities, ag input stocks, it is similar, but there are various companies. Some do fertilizer, some do seeds, they do other things in there. But again, it's more of a sector play, and if you're going to see, a sustained rally in commodities, or correction likewise, then that often will spill over into the ag input sector. And if not right away, again, that's where I look for opportunities. I look for related, correlated asset classes, and quite often when I notice a rally or a correction in one that starts to gain traction and looks legit, and the other hasn't yet reacted, that's where I look for opportunities in that other sector that usually, or related trade, I should say, that will often play a game of catch up. So those are the opportunities I like to sniff out. And I've recently talked about, if the breakout in the U.S. dollar sticks, I think ultimately it's going to spill over into the stock market. All right, let's dive into this. We're going to go over, there's only about maybe a dozen ag input stocks, and there were a handful of other stocks, kind of miscellaneous. A couple energy stocks. Have been bullish on energy, especially oil and gas sector, since just before the elections. Before that, it was the coal stocks. They've been ripping too. That was actually a few months earlier. They bottomed first, and I'm going to start out here with the ag input stocks, and I'll roll into some of those other ideas. It won't be a super long video, because I'm not covering too many, and these are just updates again. I'm going to start out in no particular order. This one, MBII, that's Marone Bio Innovations, and you can see we had a downtrend line here, which was broken. Again, all covered in the previous videos. There was a breakout right there, and then we back tested it and set up with this different downtrend line. So the first video was from, mid-November, and so that was right here. And I said this one was a trade setup. Remember, some of those were actionable trade ideas at the time. I know at least one was breaking out the day that I did the video, it was just starting to break out, and I mentioned that as an actionable trade. We say there's a big difference between a setup and an actionable trade. A setup sometimes never materializes. And so, whereas an actionable trade means you have an objective entry such as a breakout. And that happened shortly after the video, and since then we are up. If I can grab it there. Well, we spiked over my 135 target twice, for a total gain of about 23%. And I want to add this. The reason I'm doing this video is I do think it is time, as bullish as a lot of these, stocks have been recently. The trend has been strong. This is one of the smaller gainers at, 20+%. I think it is time to either book profits on some of these outright, or at the very least raise stops. For many reasons, but particularly a lot of these are now at resistance level targets that I laid out before after some pretty strong runs, and that coupled with my expectation for a correction here soon in the stock market means we'll probably see some of the hot air come out of these guys. So there it is. You still have an opportunity, and there's a trend line right here. I'm going to tweak this uptrend line a little bit right there. There you go. So if you zoom in real tight, you can see in the video you have an uptrend line. So if you want to continue to ride this one, longer term it still looks good. Longer term I remain bullish on the agricultural commodities, and therefore these guys will probably continue to benefit. My next target remains 152. However, we've been checked at that 135 target several times. It's working great. This is a lot of these stocks I'm about to go over. Great examples of technical analysis. Again, you can just reference the previous video, see the levels that were discussed. Most of these lines I haven't modified. That one I tweaked a little, this uptrend line. So there it is. So an objective stop would be somewhat below this trend line. This is a volatile stock, so you don't want to put it too tight, or you might just get clipped on an intraday move, but that would be bullish. Where otherwise, if we look at it this way, you have an ascending triangle pattern here. That's an inherently bullish pattern. You want to, that could break to the upside, but sometimes these patterns do break to the downside, and that's bearish. So again, these are your levels to watch. 135, we're right there right now as I do the video. 136, giving you another opportunity to book profits if you want to just take the quick 20% or so and run. Otherwise, let it run if you're a longer term investor. Next target's up there, and yeah, ultimately I have a target up there at 182, all the way up here. Moving on, IPI, that was covered. Yeah, that was also covered in that first video. Let's see where we were. IPI was listed as a breakout above 1172 right here, and so we would have been right here, mid-November, so right before the breakout, and boom, there it was. We popped 1172. And now we've hit my final target. And again, this is the point for doing this video is, I try to wait and do these updates in a timely manner when there's either an objective time to add back into these, add new positions, take new longs, or in this case, get out. So what I see here, this is a major downtrend line. We had a little bull flag along the way. There's a flagpole right there, and then the leg up after that, and that has pretty much hit the measured target. If you recognize a bull flag pattern, they're continuation patterns. You wait for a breakout and to the upside, and that's your buy signal. And the way they work, and I suggest you Google this term, bull flag continuation pattern consists of three parts: an impulsive leg up with nearly vertical selling like that. Buying, I'm sorry, followed by an area of consolidation, usually on decreasing volume, and then a breakout on expanding volume. And to get the measured target of that pattern, you take the distance of the flagpole to the top of the flag, add it to the bottom of the flag from right before it broke out, and that gives you your measured target. And I'm just eyeballing that one there. I didn't measure it exactly, but close enough. So it's all the more reason to book profits, or at the very least tighten up stops. That is a pretty decent downtrend line, and we hit my final target, which again was laid out over here at the time. So from the breakout point, you've made about 137% on the stock. Do what you want, but I would take the money and run on this one right now. Maybe a pullback to 2060, 2087 you might consider adding back. Let's just see where they go. I'll do an update, but again, there's one I think we milked, milked a lot of the move so far from the breakout, and we're right at that final target. Again, pretty significant resistance, dual resistance, in other words, price plus downtrend line coming in together. Okay, next up, UAN. UAN was that was one that was breaking out during the video. This had a 10-to-1 reverse split. So when I did the that video back in I think November 18th or whatever it was just breaking out. 10-to-1 reverse split means this level was 79 cents. And they did a 10-to-1, so that makes it 790 now, but the same level before, and that was right there. So there was a day of the video, up to 18th, and I mentioned it was just breaking out, and I don't know, I think I added that downtrend line since, but it was the 79 level I said would trigger an objective entry, or had already right as I was doing the video. And so if you took it there, We've already exceeded my 1350 target, and you're up about 136%. But what I see at this point in time, here's a uptrend line to watch. So I would consider a stop. You can let it ride. We may continue all the way up there to that maximum, that final target of 2610, but you can see this negative divergence forming here. The catalyst for the move was this big positive divergence right there. And then the break above, like I said in the video, I listed it a break above 79 cents, which is now $77.90 with the reverse split. But there it is. We're kind of we are in no man's land. I talk about that quite a bit. That's what I call when a stock is trading smack between support and resistance. So quite a bit overbought. Overbought doesn't really stop a stock in a strong uptrend. It can continue to become more overbought, but it is, hey, a heads up. I certainly wouldn't add to it here. If you do, you can make a case because you're above trend. There's that nice trend line right there. A lot of reactions there. It may continue up, but again, whether you buy it here or if you bought it back here on the breakout, that's where you might want to consider a stop below there. And again, I'm prone to keeping stops very tight or just outright take profits and run. That's when you get 130% on a stock in just a couple months, less than 2 months, it's probably time to take the money and run. Next up, RKDA. Some of these have not taken off yet. RKDA, I said, would most likely begin to play a game of catch-up, and I said you can buy it here. I did a couple updates, including the update on these ag input stocks on December 31st, and I'm trying to recall the notes on RKDA, but I believe I mentioned it as being an objective long down here on 238 if you can buy it, because that's really good support. You have a lot of the previous reaction lows there, and you're below this triangle pattern, and this is the downtrend line. It needs to pop, so it's still a setup. Again, you could have bought it here at 238, and you can still wait for a break of the trend line right there. I'm talking the blue downtrend line. I probably wouldn't put as much stock into this trend line here. I might even take that one off. You know what? I'll just leave it there because I had that on there before. That's what caused that breakdown right there. 344 remains the first target or the next target from here. Although again, the trend line comes in as resistance before that. I had to pause the video there for a quick phone call. Either way, that's where it was on that. So there it is. That one has yet to run. A lot of upside potential if and when we get the breakout. You want to see again the trend line break. 344 is pretty significant resistance. I would expect a reaction there. No guarantees, but maybe a place if you want to take a quick buck. So if you bought it at 238 and this sector continues to go for a little while here, you're talking about 44%. Again, up to you if you want to take the quick profits or tuck this one away for a longer term play. All right, next up was, or not going in any particular order, I think these are roughly the order covered in the first video. Seed. Seed was recommended as actually a continuation trade. I talked about that in the video earlier today. The stock market's been in an uptrend, a resilient trend, but there haven't been any continuation setups. That's on this one. I mentioned it ran up here, put in divergent high, and at the time I said it was in no man's land. Or this might have been on the last update. I'm not clear. I remember I did a 12/31 update and a November 18th original. So wow, I can actually look at it right here. Oh no, that was it. Okay, so on November 18th, I mentioned it in no man's land, smack between support at 777 and resistance at 1081, and said listed it as a continuation play, expecting a breakout, but saying that's where you needed to wait for a break above 1081. That came right here on the 17th of December, and if you took it there, it already hit my next target. I followed up with that target. I believe I had that target at least in that December 31st video, and it was hit just recently, hit the other day, and you're good for about 63%. Again, the point of this video is to mention that quite a few of these trades are hitting some of my uppermost targets. I do have an additional longer term target at 28.48. So up to you whether you want to raise stops and let it run. Always a nice place to put, or objective place is below a recent reaction low. In that case, you're talking about 1570 or a little bit below that. You could also add an uptrend line that this stock may continue to respect, and either way, or you take profits here at the 1757 level, and if you get a pullback, you can always buy back into it. Up to you. Next up is CGA, that's China Green Agricultural, and this one was posted as a breakout here. It was sloppy. It has a lot of whipsaw. It had quite a few, but also had nice support here, about 241, which it held. A few little whipsaw moves down below there, but then finally this is the breakout that stuck. And off that 241 level and the downtrend line, this guy has rallied all the way and hit and just exceeded my second target there, 559. I actually sharpened my pencil. The resistance is at 565. And from the other day, it was up 185%. That's we're through yesterday from that 241 level. So now, we are above the 565 resistance, and that technically speaking does open the door up. I have a longer term swing target or trend target up there, about 1435. Can it hit that before it has a big correction? Possible, certainly, especially if we continue to see momentum in the sector. But it's getting a little lofty, and so if the other ones that I showed you correct that are at resistance, this will probably prove to be a momentum-fueled overshoot. That's what I call when you have a lot of upward velocity or momentum heading into a resistance level. It is more than usual to see it briefly overshoot the resistance level and then come on back down. So where are your objective buy points? I mean, technically, because we took 565 out, but I'd rather have seen consolidation there and then say on a break of 565. This one, if you're in it, great. You can let it run. There's momentum in the sector. Raise your stops or book profits and see if you can get a pullback back down to that $4-ish support right there, about 406, maybe stepping a little bit before that. And yeah, that's that. And we have an uptrend line, but it's so steep, I don't even know if it's valid, but you could certainly draw one like that. But again, the stock's gone nearly vertical since that reversal off 241 in the trend line. Next up, YTEN. This is another one that's yet to really take off. That one was, let's see, mid-November. Well, these were the levels I would have covered here. 595 support. $7. I believe I would have listed that one. I'll have to check the notes as a breakout, objective entry on a break above $7, a solid break. And it just recently, you can see this candle from a few days ago right here on Tuesday. There's a breakout candle, and that should open the door for a move up there to 842. Unless you get a correction in the sector, I don't see why it wouldn't head up to that 842. But if the sector corrects, then a pullback to $7 would be an objective re-entry or add-on if you took the breakout the other day there. And again, this is a longer term target. 842 is a big level. I have a color-coded yellow. That's a lot of reactions there. So I think if and when 842 goes with conviction, this thing should easily move up to 1090. And then quite possibly more longer term. You can see a longer term target up there around $27. But that, even from 842 to 1090, you're talking about, what was that? I just measured it out. You're talking about 30% almost if it gets there. All right, next up, few others. These, I believe, were mentioned in the follow-up video on December 31st, and one of them is Mosaic, MOS. Resistance here was at 2220. It bounced around that for a while, and then you see that little period of consolidation, another leg up. So, it's in this one's solidly in an uptrend, and again, that's all the makings of an uptrend. Stock making a series of higher lows and higher highs, and that's what we have here with Mosaic. And then also, when you look at it longer term, you can see when I zoom back out, the breakout of the downtrend line right there. Breakout, consolidation around that resistance level, a little consolidation around that one, and we blasted right on through that 2845. Okay, another one is NTR. I believe this one was covered in the December 31st video, and this one is now, that would have been right around here somewhere, and it's now taken out that trend line. So we had this big triangle pattern and a downtrend line. We got rejected there after a failed breakout attempt, but we're above it. So longer term, that's a breakout. It looks good, but if we correct in the near term and you're looking for an objective entry add-on, it would be a back test to the trend line right there with a stop. Depends on that. You could put a stop below that reaction low, and then you also have the uptrend line not too far below that, which should, quote unquote, should act as support if we hit it. If it doesn't, that's not a good thing, so you want to let it go. All right, ORGO. I think this is the last of the ag input stocks that I've covered. This one, let's see if I covered that on the December 31st video. We would have been there. We had a trend line. I can't remember if I covered that. Let me check. Yeah, there it is. There's a screenshot from the November 18th video. So yeah, and that was the 479 level. So there it was. We broke out 479. If you missed the breakout, you get another chance on the back test. And from there, from 479, it's through today's high. It's still running. It's gained about 118%. Looks pretty clear because it took out the 823 level. That was resistance. That was a target I had. I still have a max target up here of 1441. So do you take it today? If you're in it, great. Just trail your stops up. There's a big gap right there, a reaction low. I wouldn't have a stop any lower than that at this point if you took it on the breakout or back test of 479. But if the sector does correct, you can get an objective entry on pull back to the 823 support, or I should say, unless you want to scale in, partial position to 823, and then a backfill of the gap. That would be your next objective entry with a stop somewhat below there for a swing up to 1441. Okay, and finally in that video, the November 18th video, I mentioned a few others in kind of niche sectors. This was one, PEI, Pennsylvania Real Estate Investment Trust, was in this, had this downtrend line, divergent low, falling wedge pattern. So it would have been the day, right here was the 18th with a crosshair. So 2 days, actually 3 days after that, we broke out. It was a nice breakout. It didn't gap away or anything like that. And it's up again big today, another 33%. So that gives us a gain on this one right at my 153 target with a reaction there so far today. From today's highs, that's about 153%, or we'll say about 150, maybe a little less than 150, about 140% if you took profits at the 153 target. And again, point of this video, although this is not an ag input stock, it is another one at resistance. So here's a common theme. I'm seeing a lot of the trade ideas that I've shared in the recent weeks running into resistance now. If this, can continue to rally, if it can take out today's highs, then that should open the door to a move up to my final target there at 266. Otherwise, look for a pullback. Anywhere in this area would provide an objective re-entry add-on down to 91 cents, but not below it. I wouldn't like it if it went much below that 91 cent. And that'd be a pretty healthy pullback. But, when you're trading these low-price stocks, I mentioned this one as being aggressive, Chapter 11 filing and everything like that, being a penny stock. But as I said at the time, I wouldn't have shared the trade idea if the gain potential wasn't worth it. So that's why, I'll share sometimes these higher risk, lower price stocks, because you're not going to get 157% in just a couple months in Apple or Facebook. All right, next up is QEP. I mentioned a couple in the energy sector. It's a sector I've been bullish on for the last few months here. QEP would have been covered right, let's see where that was. If we were November 18th, would have been right about here. So it must have been breaking out above this trend line that day, right there. And so far we're up about 160%. We hit and exceeded the 256 target. I believe that was the max target that I had listed at the time. We're above it, and that's bullish, unless it fails and we come back in. But and I think that might be the case. This is why I'm doing the video right here. See this? We have negative divergence forming for the first time in a while here on the daily time frame. So although it is above 256, and as long as it stays there, that's bullish because we took out resistance. Resistance, once taken out, becomes support. And not only that, by the way, it wasn't arbitrary, but you can see where we had a reaction when we hit that 256. That's where I often say the initial tag of my targets are where I expect a reaction, where the odds of reaction are increased or likely. And so that's what you had there. But then we went on to power and take it out. So that's bullish. But you have a potential bearish rising wedge pattern here that if broken, especially if 256 goes, that's probably going to cause a pretty healthy correction in this one. So again, up to you. You're in it. You have nice embedded gains. You can just continue to raise your stops and let it run because it's hard to say when or where and when this uptrend will end. All right, a couple more and we're done here. USRM. This one was this is US stem cell. I really liked it at the time. It was in that November video. Would have been a breakout above this level here. You had both a downtrend line and this 0080 resistance level right here, if I can grab it. And a lot of reactions there. It was pushing against there. Plus the downtrend line, boom, there was your breakout. And again, just a beautiful, to me, a beautiful display of technical analysis. Since the breakout, this one has rallied and almost hit my final target there. I guess that must have been the maximum target I had listed at the time at about 7 cents. And we fell just shy of it. And I always say this, always take profits if that's what your target. Sell a little bit before the actual resistance level because sometimes the buyers will step in early. Good for a 733% gain. And all that gain occurred. And again, it wasn't a breakout that you missed on a big 30-40% gap up. It broke out right here. And then 1, 2, 3 days later came within basis points of that final target right there. So 700 and something percent in a few days. Take it and run. And I talked about it. Very aggressive, speculative at the time. So you didn't, it's not like you had your entire portfolio in this. You would have put your Vegas money in this one. But it's worth it, to have just a few $1,000s or even a few hundred, depending on your, your portfolio size, to make that kind of gain in such short order. Rig was another one covered then, and that was coming off this big divergent low. Let's see, that would have been, if it was in the November 18th video right here. And again, reason for doing this video, 376 is the maximum target I have listed on this chart, and we're there now. That's 206% since the 18th. And we didn't hit it exactly, but again, close enough. When you get that close, we hit a high today of 363. That's big resistance in my opinion, and that's time. I think it's a good time, and we're still there. So it's still a good time to take profits, at the very least, raise stops. Where would we go if we correct after hitting? If we hit 376, or if we're going to end up reversing just shy? Well, remember, resistance once broken becomes support. So you have support at 271, really a support zone that runs down to about 243. There was a big old gap there. And if that goes, then we may come all the way back to 177. Like a lot of things I'm seeing now, we're starting to get some divergence for the first time. And that puts the odds are increasing now of a trend reversal, especially if you break this wedge pattern there. So there's another one you might want to consider booking profits on, and just eyeballing these trend lines here, these reaction highs. There it is. So what I see on this one is minimal upside. And again, that's why I'd either tighten stops or take profits. You have a couple reaction highs that may come in to form a downtrend, or they do form a downtrend line. I just don't have a third reaction yet. So either way, it looks like the upside's limited before we do get a pullback there. So maybe time to start booking some profits in the energy stocks as well. And then finally, NNDM was another one I covered there at the time, and that was I'm trying to recall exactly. I know it was covered on that the 18th of November, which was right about here. So I'm assuming then it was. Oh no, we had negative divergence. I don't know if I covered that as a potential short setup or not. Let me check real quick. No, it's just check the video. It was a long setup. And I thought everything in that video was. In fact, almost all the trade ideas for the last 3 months have been. And this one was, yeah, on a break of 492. I had mentioned that it had a intraday break but failed to take it out. It was a whipsaw through there. So I said the next break of 492. That came right here on, zoom in a little bit. There's your breakout candle. On the 19th of November, would have come the day after. And from 492, it's rallied so far about 128%. And here's an uptrend line. So again, common theme and reason for this update. You have an uptrend line. You do have, so now there it is. You have some divergences now building here, mainly from this point here on the RSI. And that's it. Now divergences are not a sell signal, but they are an indication that a trend change is likely to come soon. But again, it would be a sell signal. So if you're in this one, long right now, just set a stop somewhat below that trend line, and you can let it ride. Or if you're happy with that, the quick gains, book profits. There's nothing wrong with that. This market's getting very frothy. Like I said, from all the everything I covered in the other video and in recent weeks, a lot of my indicators are at extreme readings where when the tide finally turns, when we get a correction, there's probably going to be a pretty strong rush for the exits. And if you're not around, if you're at work that day and you come home, a lot of these stocks, especially the ones with the big gains, like I said, 130%, they're going to give up a lot of gains in very short order. It wouldn't surprise me to see many of these trade ideas down, well into double digits in a single day. And so that's it. So this is an update to those trade ideas. Almost all the ones I covered, explosive gains, many of these triple digits, some up to over 700% gains since that video. But time to start taking some profits off the table. You don't have to do an all or none thing. Always keep that in mind. Some people like to sell down to what they leave what they put in. So if you put in $10,000 in one, you've got $20,000 or $30,000 or more. You can leave your 10,000, let it run. You can take half off the table. There's many ways to do it, and there's not one. I can't tell you which one. I can tell you right now, and I've done so myself. And a lot of these, I didn't take them all. I didn't take this one, unfortunately, but quite a few of the others, and I've been booking profits. So, and I think that's like I said, a good time to do so now with many of those at significant resistance. And again, it tells you something too about the sector. If they reverse, quite a few of the stocks in both the energy sector and ag input sector, if they reverse, you're going to see the rest of the sector most likely reverse as well, even those stocks that are not at resistance. All right, we'll wrap it up here. I'll get the video out to you guys. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.